On today's show, three questions. Number one, did anyone say trade deal? Number two, what's the Fed update? And number three, why is Bill Gates giving away all his money? Welcome to Dennis Money's 2 cents, where we help Dennis navigate all the noise. I'm Matt.
And I'm Rabih.
Yeah, you are, Master Rabih. So this is my fault, Rabih. I keep doing this. I keep failing to add a third to the trifecta. This is not intentional. But what I really wanted to start with today was I was really leaning in this morning to my financial advisor kind of rite of passage. I went and played 9 holes at the country club golf course here in Salt Lake. A friend asked me to go. And I was like, man, I feel like a true financial advisor here. I'm just out here golfing on a Friday morning. I'm terrible at golf. I can't even call
Part of the
myself an
lifestyle.
actual what?
It's part of the lifestyle.
It's part of the lifestyle. It's really my intentional life design here. No, he invited me kind of last second, and I was like, go for a couple hours. And I'm not going to lie. It was kind of the life. It was kind of I was like, I get this.
Was it tough? I'm not into golf, but you guys made me into skiing. You know, the first day of skiing when your body's not in shape and you're destroyed right afterwards, your first day, like your legs are shaking. Is there an equivalent to that in golf, like the first golf of the season?
Yeah, sure. It's like more of an emotional crushing, not really your physical. I mean, there certainly is golf shape, like physical golf shape. It's just different, like mechanics wise, like your back and like making sure there's that. But it's not so much the physical toll that golf plays. It's more of the emotional and mental
I
toll.
know.
So yeah, there's certainly that. But anyway, it was a good time to get out and that private country club life. I'm not gonna lie. Again, I was kind of like, I can get used to this. It's not bad. So let's jump in. Number one, Robbie, you were super proud of this question. Did anyone say trade deal?
Yes, because we're moving the needle, the whole tariff thing. They hit in April 2nd. The president came up with a bulletin board with tariff rates across the board. And then a couple of days later, they postponed it to 90 days. And now we're like 60 days away, a little bit less than 60 days away. And everyone was thinking, so we're going to hit the same panic 60 days from now and just continue that cycle of panic, postpone. Like, how's it going to happen? And there was actually a breakthrough. And yesterday, the U.S. declared that they made a deal with the United Kingdom over trade, which, the first major one that happens. And maybe this could, one, indicate what the tariff fuss is all about. Is it just negotiation? What's going to stay? What is there? Gives us more clarity on the policy going forward. And two, the trade details themselves will actually highlight to us what's important to the US and what they are prioritizing and putting on their agenda. So I got a small summary for you about this UK-US trade deal that they just signed. And it kind of, I think you'll have opinions on it once I share the data. So are you ready?
Ready.
Okay. So the first thing first is, what was it before the trade deal? Like, what is the relationship between the UK and the US? They trade between each other around $390 billion. And for the UK, the US is the largest trading partner. 17% of all the UK trade goes to the US. We are the biggest customer for the UK. The UK is our 7th largest customer, so it's not the most important. It's still important. It's 390 billion, but it is ranked 7 recording our trade relationships. The trade surplus out of these 390 billion is around 78 billion. I would call it 9 because it's in pounds. I would call it around $80 billion out of 390 billion towards the UK. So that is the deficit amount in a sense with respect to the UK. What we trade is usually stuff related to finance, technology, and legal expertise between the two. And it makes sense because they're across the ocean. It's not easy to transfer goods and services as much. And the types of economies are similar. Both are consumer-based economies. However, before this trade deal happened, there were tariffs lined up. And even before April 2nd, before the stuff on the bulletin board were added by the government, the US has imposed tariffs of 27.5% on cars and 25% on steel and aluminum coming from the UK. That was what it looked like. And then on April 2nd, when that bulletin board was held up, reciprocal tariff rate on the UK was 10%. The minimum is 10% on all the countries, and the UK was one of those countries that actually got the minimum. We're just going to add 10% on top of everything, including the 27 on car, 25 on steel aluminum. Okay, This is the relationship between the US and the UK. So what happened with the trade deal? What did we go into? So there were probably 5 main points that they covered. And by the way, not all details about the specifics were published yet. This was just based off a press release from the White House on what they discussed. Regarding the automotive sector, the tariffs on UK car exports to the US will decrease from that 27% to the 10%, up to 100,000 vehicles annually. And like, I was wondering, like, what type of cars do people drive here that are made in the UK? That is something that I didn't even research it, but I was wondering, like,
you look it up? I don't even know.
I don't even know. It's like, what cars, 100,000 cars from the UK will come to the US at 10%, and then they go back to 27 beyond that amount. That was the first point. So the automotive, so that is based on the initial conditions, that's a point towards the UK because they were able to negotiate their cars a lower tariff rate from 27 to 10, right?
Do you want to hear the cars?
Oh yeah, hit me.
This is according to a research assistant, Google, quite a few. Aston Martin.
Oh yeah, James Bond.
So Aston Martin, McLaren, Rolls-Royce, Bentley. No wonder it's only 100,000 cars. It's like all the top ones.
Yeah.
I guess Mini Cooper, Land Rover, Jaguar.
Okay.
And then there's kind of these random other ones, but those are the main ones I'm seeing here.
Yeah, putting the McLarens and Rolls-Royce aside because no one well, drives
when does your McLaren get here? It's on its way, right? It's being
yeah, it's just a little bit of tariff, delaying it.
Yeah,
you got actually ordered 2, not 1.
It's 2 for 1. You're like, if it's gonna get hit with the tariff, we might as well get a couple. Yeah, I get it. Yeah, I got a couple rolls coming my way.
So okay, that makes sense
for the kids. It's my kid's birthday coming up, right? So my son is 4, my daughter will be 6 in June. I figured I would have a Rolls Royce. It's for them though. It's for the kids.
Yeah. You should have bought it when they were born, but now since you're late, you have to upscale up to a McLaren.
Exactly right.
Okay. So that is what was happening with the cars. Regarding steel and aluminum, the US will eliminate tariffs on UK steel aluminum completely. So there was that tariff on them, the 25%, and now it's not even there anymore. So we can import, which is interesting because in a press release a couple of days ago from Canada, it wasn't a press release. The Prime Minister of Canada was at the White House in the Oval Office.
I saw that.
And the president was like, we don't need Canadian steel. But now they removed the tariffs on the UK. So it seems like it is a need to the US. It's just a matter of how they source it and under which economic terms that they source it. And these two actually are kind of in favor of the UK. So the third one is agricultural products. The UK will increase imports from the US regarding beef, ethanol, with a tariff-free quota for 13,000 metric tons of beef. So it's like the cars. You get 100,000 and then the tariff goes up. With US agricultural product, we'll get beef and ethanol up to 13,000 metric tons of beef. It's just crazy that they measure beef in metric tons. And then, a tariff rate will go. But they said, importantly, the UK maintains its food safety standards, continuing to ban hormone-treated beef and chlorinated chicken, which makes me wonder what we're eating. But now the UK is gonna, actually, if you think of it, when you travel outside the US, it's hard to get a really good steak. And now this is probably in the benefit of Americans traveling abroad, and they'll be able to get themselves some steaks. So
I just wonder where, is chlorinated chicken going to be found if I go outside? Because I really need my chlorinated chicken. You know what I mean?
Yeah, it's an acquired taste. Let's put
just
it that
dip
way.
It in the pool real quick.
Make sure no bacteria survives.
Yeah.
Okay. There's also stuff about digital services that are minor. The UK agreed to reduce its digital service tax, which affects the US tech sector a lot, especially exporting these services. And there's also part of the deal related to customs and procurement. It includes commitment to streamline custom procedures and enhance US firms' competitiveness in the UK procurement market. So, as we are saying, let me see if I still have any other point over here. But okay, as we are saying, it seems like the 10% is staying. That is the first point to notice. So any negotiation that is happening, it's probably happening at the expense of the pre-existing tariffs before these reciprocal tariffs. So we came to the deal with the US saying, oh, we already tariff these products from you. We're adding a new tariff on everything, and we're not negotiating that. We are negotiating what existed before what we just imposed. We're allowing you to negotiate on the stuff that we were bottlenecking for a couple of years. But what is coming new is here to stay, which I think is big, because this means even if trade deals go with all countries and this same pattern manifests itself, we're going to have 10% tariffs on everything coming from all countries. That is something very interesting to look at. The second point is that we were wondering in which direction that would go, escalation versus no escalation. We could go to the other side with China, where we just have very high tariffs across the board and we're living in a more fenced up global economy, or we can go and negotiate something where we lower the trade barriers even more, where the EU proposed this,
Plot twist.
yeah, plot twist. The EU proposed this, but they're not going in that direction, it seems like, where let's remove tariffs across the board and let it be a free market. We'll see how it pans out. I think that the fact that we have a trade deal is very healthy for the long-term efficiency of the global economy. We'll see how it pans out. The American interest that can be read through these notes is that they are just trying to control that imbalance in trade as much as they can. 300. So there's a surplus of 80 billion. You have a 10% on that. It means like there's an $8 billion that is going to be coming to the US from that, assuming that the surplus stays constant, but they affect each other. So the fact that there's a tariff, the surplus will get affected. But assuming it stays there, that's $8 billion coming into the US. If we keep doing that with all other countries, you'll probably bring in money. Okay, great. Let's run with this even further. Will that amount of money after a trade deal gets negotiated be enough to close the deficit hole, be enough to allow the US to outgrow itself out of the debt? Those are probably are on the agenda. Will they pan out, or do we know from just the information that we just received from the first trade deal whether they're going to be happening or not? No, that's where the uncertainty remains.
Forget all that, Rabih. Is it going to be enough to make sure I don't pay income tax? Because this is the new rumor floating around. This is the new rhetoric. That's what I'm wondering. How do we pay no income tax? I say this tongue in cheek. Obviously, that's never going to happen.
It is tough. No developed economy, and this is just the math on the ground. It's not like US versus non-US. No developed economy can survive with no income tax. The only other countries that are prosperous, and we need to highlight that, because you can choose to not have income tax, but then your country will not be prosperous.
Failing.
Right? The only other countries that are prosperous and they do not have income tax are usually countries that have been blessed with natural resources. US isn't blessed with natural resource, but they are blessed with so much natural resources vis-a-vis their constituents. And in that sense, think of the countries in the Gulf. Think of the United Arab Emirates, Saudi Arabia, Qatar, Bahrain, these Arab countries that they discovered that they're sleeping literally on a sea of oil in their ground in the 1970s, and they were able to just jumpstart their economy. But the thing is, those people's population is very small. You're talking about 10 million people with an oil production capacity that is vis-a-vis as much as Russia and the US. Of course, you're not going to pay income tax. But this does not work in the US. This would not work in Canada. This does not work in Europe. Does not work in Australia. I'm talking about developed countries where a big part of the economy depends on consumption. And that is your oil, that is your petroleum, your consumers being able to pay taxes. It's a utopian world. Do we like to live in a world where there are no taxes at all? Yes, but given the macroeconomics factors such as population density, population contribution to economy, the share of the economy contributed by labor versus natural resources versus machinery versus non-producing sectors, it's a reality on the ground that you have to think of it.
Yeah, I mean, I think it's a PR stunt, obviously, to get
Yeah.
people on board with this narrative of tariffs. But I want to go back to something you said in reference to, I'll ask the dumb question. I'm good at that. What would be the problem with going to just zero tariff policy? Just like true global trade, remove tariffs. Like, what's wrong with that?
I love that question. And Actually, that was an illusion. It's not even a question. Because usually when you are learning from a textbook, you look at the extreme simple case scenarios, right? If you look at 100% isolated country not doing any trade, you are just looking at the economy from the perspective of what the consumers do, what businesses does, and what the government does. You are excluding your relationship with any other country. Imagine that you are living on an island on a planet that only has that island. That's it. The simple case of a simple economy. The other side of the spectrum, the other extreme, is that you do not have trade barriers at all. And by the way, tariffs is related to goods and services, but barriers in an economic sense extend beyond that. You've got the barrier regarding the free flow of money throughout the economies. There's no, like, it's called capital control, but that is the equivalent of tariffs in the money regime. You've also got the free float of labor across the economy, and that's usually called stamping your passport across a border, custom and border protection, right? Instead of tariffs. So you've got the people, you've got the money, and you've got the resources slash the goods, right? Those are the three. If you go to an economic system where there is a pure free floating of these macroeconomic factors, then the whole world, the whole planet will be one economy. And the question is, if we go there, what does economic theory tells us? Economic theory tells us that every industry or every region or every producer should focus on what they do best, because this is what allows them to create the most value, or in other words, to grow the GDP at the largest, most optimal way. So if I'm good at, let's say, producing food stuff and cars, and you're really good at also producing food and cars, but I can produce food cheaper and you can produce cars cheaper. Economic sense tells us that I should only produce food and not allocate any resources to
Like
cars.
a true utilitarian.
True utilitarian.
Yeah.
And you would not to want to go there, because at that point in time, there will be power frictions. How come? Let's say China is the global factor of the world. They can produce anything. If we go to a place where there's zero trade, it just means that China will produce all the plastics and stuff that we have in our houses. The US is a strong agricultural household. We produce a lot of food. We export a lot of food, right? It'll be where the US only exports food for the rest of the world, doesn't export anything else. Other places will just be there for tourism. They do not export anything. They do not create any. So if you think of it, we're still a bunch of countries, different languages, different races, different
Different
species,
cultures.
different cultures, and there is, a societal slash political need to preserve that community, and with that comes the political power that I want to create those barriers. So that economic extreme of one country is only possible if culturally and behaviorally and politically we agree to just be one species on this earth. I don't think it'll happen because we always need the other. So unless we discover aliens and we're in competition with an alien planet,
You
I
mean we've
don't
already
think
discovered
we're gonna.
aliens, but
Yeah, yeah, as competitive economically as us, I don't think we'll rally all together to treat ourselves as if we are citizens of one country called Earth. We're
yeah.
going into economic fiction over here. But this is how you have to look at it. Removing these barriers, in a summary, actually conflicts with political motives and societal motives and cultural motives that us complex creatures would still need.
Yeah, what I'm hearing, Robbie, is a couple things. Like in some ways, you're highlighting we still need to function as a global society, if we call it that, and like zoom out. We need these kind of tensions and barriers of like different cultures, and it's kind of like it makes it work as long as we can have things like trade deals and all that. The other thing that I think you're alluding to, it sounds like, is, and I've heard this a lot and read about this a lot around in regards to like national security and like keeping these barriers in place, because the taking this to the farthest end of the, or furthest conclusion, would be like over reliance on certain societies that gives them too much power, that can lead to just national security problems or issues, and the worst case being like massive war, possibly.
Yeah, I political systems overwhelm and are the infrastructure for economic growth. That's why you do not see thriving economies where there's political turbulence, right? So in our example, we're saying, hey, let's remove all tariffs. Let's just open up the whole border situation thing, it means that you are putting economic importance above of political importance, and that's not human nature.
Yeah. Nerdy financial advisor alert. I'm sitting here thinking, if we look at this in terms, and tell me if I'm off base here, Rabih, but thinking in terms of like kind of different approaches to investing in the market, right? And you've got traders, you've got active investors, passive investors, you've got people that believe in sectors and sector rotation. And there's a great kind of concept again by Morgan Housel where he says like most fights or arguments around money are just two people playing two different games on different timelines, right? I'm bringing all this up to say it's also kind of what makes the market work. Like if everyone felt and believed the same way about the market or how to approach the market, there'd be no price discovery, there'd be no premiums, there'd be no return, right? Like that. Am I thinking about that the right kind of a similar, maybe a terrible one, but kind of an analogy there is like you kind of have to have these differences for things like a complex system to actually work long term.
100%. If the market is only made up of you and me together, and we both have the same
That'd be a
opinion,
heck of a market, let me tell you.
yes, but that's not my point. Is if the market is just you and me, and we both think that the value of a certain stock or commodity has to be higher, then we'll never have a trade. You and I will never trade together. We'll never have a market. You need to have opposing information. There's another level of it because, yeah, once you and I agree, the human experience continues and the value is derived from what is still there that is uncertain. How do we build it together? So yeah, but I agree. You need two opposing sides. You need a buyer and a seller to make a market. Without it, there's no market.
Got it. That's great. I mean, we went off on a tangent there, but hopefully these are helpful tangents. Anything else you want to say about the trade deal? I want to add one thing that I just saw as we were going through this, but anything you want to add there?
No, I think there are trade deal talks. The first one's happening between the US and China this weekend. So
Okay,
we'll
I was just
probably
going to bring
report.
this up.
Okay, sorry.
I thought this was pertinent. I saw an article as we were going through this. First Chinese freight ships goods hit the or first Chinese freight ship goods. This is a mouthful. Hit with Trump's 145% plus tariffs. They arrived. Someone needs to fix this headline. I don't know who their headline writer is, but this was about as bad as you could have written this. Holy cow. Bottom line is the very first shipments hit the shores of the US in LA and Long Beach, and about 12,000 shipping containers here, kind of a different group, a lot of Amazon stuff, Home Depot, IKEA, whatever. But this led to, I guess Trump has now come out and said he's willing or he's open to lower tariffs on China to as low as 80%. Oh man, that's a real discount
Very
there.
generous.
And then it's led into this discussion that you just alluded to. I guess both sides have come out and confirmed talks are beginning, I think, like you said, next week. So maybe some hope on the horizon.
I can't wait. Honestly, the world needs, proper agreements so we can just move forward.
Yeah. Yeah. I'm going to double down on this take. Jake and I talked about it earlier this week. He's obviously not on the show, but I'm going to speak for him because he just said this to me and I back him up. I'm still contending, Rabih. I'm still doubling down on this. The U.S. market, S&P, I'll say specifically, ends positive by the end of the year. What say ye?
I'm still indifferent.
That's
I
the
don't have.
rational answer, Rabih. I want a little spice.
The rational answer is that movements in stock prices are independent of each other. So what has happened from January till now is independent market meaning, although in reality, like logically it doesn't because it's related to trade talk, etc. But economic activity is independent. The stock price as a movement is independent from one period to another. So just like we expect that the stock market would be up 70% of the time in the beginning of a year, from now to 12 months ahead, it's also probability being up 70% of the time. So the thing is, the probabilities did not change just because a certain decision came up or a certain tariff trade deal showed up. We're still there.
Okay, Master Rabih. Thank you.
You asked for
I'm
the
just not going to get
rational
what I want out of you.
answer.
I just want a little spice, but now I have to get the academic response, the very measured, probabilistic, statistical,
You opened that
economics.
door.
Yeah, that's my fault. It's my fault. Okay, let's move on. This will be a quick update. As we mentioned, what's the Fed update, Rabih? You said this would just be a couple of minutes just to kind of hit what's going on with the Fed.
Remember the good days when talking about the Fed would take the whole podcast?
Yeah.
Not
The
anymore.
good old days.
But the Fed met this Wednesday, and it's their May meeting, and they decided not to change interest rates, which we expected. Like, we saw the economic data 2 weeks ago, and we said none of this highlights or indicates that the Fed might go in a direction to cut interest rates, right? So they did that. They have a statement, and all I have is that they changed two main sentences in the statement from the March meeting because they didn't meet in April, and it summarizes where we are right now. So I'm going to read those two statements for you. Previously, it said, they started the statement with, recent indicators suggest that the economic activity has continued to expand at a solid pace. Now the statement says, although swings in net exports have affected the data, recent indicators suggest the economic activity has expanded at a strong, solid pace. So all they said is like, yeah, we acknowledge that the economy is going through. We acknowledge that, exports did some turbulence, but we are still where we are. And that is true economic wise. This is what the data showed us. The second point was they really just added one sentence. They said the committee is attentive to the risks to both sides of its dual mandate. That was the original sentence. And now it is, the committee is attentive to the risk of both sides of a dual mandate and judges that the risks of higher unemployment and higher inflation have risen. That is all the change. The Fed could not go slower, unlike what the president wants. But all they're saying is like, yeah, we're seeing the data moving, but this does not give us any signal to do anything different regarding our initial communication regarding the path of interest rates.
So he didn't finish anything with like, "What's up now, Trump?" or "What's up now, Donnie?" Nothing
Yeah.
like that.
No.
Okay, he's doing that behind closed doors, maybe.
Probably.
Just sitting there, like, keep coming at me. Okay, so no major updates. Just we're gonna keep looking at data. We're aware of what's going on.
Yeah, and the data that doesn't, well, we'll see the data. If the data comes bad, that'll give the president a reason to go after the chair and tell him, hey, cut interest rates. And if the data is good, it'll give the Federal Reserve more reasons to say, we're relaxed, we're chill, we're just going to wait.
Yeah,
And it continues to be continued.
got it. What I would give to get Jay Powell on X and social media of some kind, you know what I mean? Just what I would give. Can you imagine the battle between Jay Powell and Trump? It would just, I mean, if I don't, it'd be too much. It'd be too much. Okay, let's wrap up here. Thought I saw an interesting article. I thought it'd be worth just spending a couple minutes on. The question being, why is Bill Gates giving away all his money? He actually is, according to his statement. He publicly reiterated. He said this before, but I guess he's doubled down that he's giving away. Now, the statement does say this wasn't an exact quote, but from the article it says he'll give away almost all of his remaining wealth and wind down the namesake charitable foundation he co-founded with his ex-wife Melinda by the end of 2045. So almost all his wealth, Rabih, when you're worth over $30 billion. I don't know what that means, but he has basically publicly stated over and over and over again, kind of like Warren Buffett, I believe, has said many times, the plan is to basically give away all their wealth. A couple of other things here I wanted to throw out there before getting your thoughts. So he and his ex-wife Melinda have poured a combined over $60 billion since 2000 into the Gates Foundation. They are the second biggest philanthropists in the world or to ever exist, based on how much they've given away. Even after that, Rabih, even after giving away a combined $60 billion, they are respectively 13th and 56th richest people in the world. So Bill Gates is worth 113 billion. Sorry, I misquoted. Melinda is worth over 30 billion. So he's
Okay.
worth over 113 billion. The other part of this article, last thing here, is they're saying, what if they were never philanthropic? What if they never sold and gave away Microsoft to these for the Gates Foundation? The projection here by Forbes is that he would be the very first, at this point, right now, he'd be the very first trillionaire. He'd be worth 1.2 trillion is what they're estimating, even after the divorce in 2021 is what they're saying. Just imagine that. Like that is, he'd be the first trillionaire if he would have never given this money away.
That's country level amount of money that will
That's just
fill 80% of
right.
the US deficit.
Yeah.
It's a big amount of money. Wild.
Any thoughts on this?
I have one opinion on this. I think this is a proof that there is a point where you think that there is an upper limit to money. Like usually when you're just making money, there's like more is better. It's always that more is better. But there's gonna get to a certain point, and it's probably around the 30 billion mark. I do not know where it is.
Probably.
Where you say, well, yeah, I don't need any more. I don't care about giving it away, you know?
I think they both passed that a long time ago.
Yeah. And I wonder, it's like, what is that line? Financial advisors, when they're trying to tell someone, you'll correct me on the details here. It's like when they're ready to retire, when they're ready to make work optional for a dentist, it's usually when you get to 30 times your annual spending. Is it set in stone? Is there a higher number? Is it a lower number? Like what determines the threshold beyond which it's not like, yeah, more money is okay, but I don't need it. No, I don't even care about money.
Yeah, it's interesting. These conversations, I always think of, I mentioned this on a podcast a while back with Ryan, but a quote I heard from Edward Abbey. I referenced this in the newsletter, Rabih, the internal newsletter, but I think it's pertinent in these conversations of growth for the sake of growth is the ideology of a cancer cell. And I think to your point, like where is that line? I'd say it's different for everyone, but this whole like you're either growing or you're dying mindset, like just keep moving. Like I think growth without intention and growth without purpose is actually pretty destructive. I actually think it will destroy you from like the inside out. I really believe that. I've actually seen this, not to the level of Bill Gates, obviously. Like he and I haven't talked for a while, but I've seen this at like smaller scales of like truly seeing money destroy people. And it's not the money. I don't think it's the money. I think it's the lack of intention and purpose of like what that money's actually doing for you in your life. Like, what is it actually serving? I've actually recently was having a conversation with a friend and we were talking about how I think there's kind of like after the level of like basic needs are met, right? Like like every person listening to this has their basic needs met. Beyond that, there's really, and Rabih, I want to hear your take on this. My belief at this point is there's only two buckets. There's only two places your money can go. It's either to build wealth that you define yourself, or it's to chase status. It's two broad categories, but it falls into one of those two things. I think everything you do with money past basic needs can be categorized in one of those two ways. Rabih's thinking.
I like it, but I feel in this conversation, we are defining money as something that it is not. In that sense, you're saying that money is this raw material that can either grow and become wealth, or it can be transformed in a status. And probably this is my own personal philosophy of it, but for me, money has always been a medium of exchange. In a sense, if I have
Nerd.
100, if I have $100 in my bank account, or I have 10 million bucks in my bank account, I do not see the 10 million bucks and see that it is something more. I just see it as stuff that I can do. In that sense, the weight or the definition of it goes from money as a concept to the person. So what you're doing with your money is think of it as how much time you have left until you're alive. Having a lot of time until your death is like having a lot of money. It's not something like the fact that if someone tells you, hey, I'm gonna give you 50 extra years right now, and it's like, yeah, what do I do with 50 extra years? Like, it's there. It's what you're able to do with that actually provides its value.
Yeah.
So for some people, chasing that status might be what they do with it. For some people, it's the feeling of grace and happiness that comes from philanthropy that gets them. For other people, it's just the luxury of just being lazy and living in a super convenient lifestyle that gets you up to it. But beyond that, it's what you do with it. And a lot of time, yeah, you throw money at something, but it'll not move the needle. And that's why it's just a medium of exchange. It's like I'm just moving something that I want, something that I need, into a realistic manifestation of it. So in that sense, having a lot of money isn't the defining element. It's your needs and your wants, your character that are the defining elements. So what do I do with it? Personality, your want after the needs that you mentioned is to chase status. Money is there as a medium exchange for your status. It's like after you meet your basic needs, You have your wants. After the needs come the wants. And your wants talk more about you as an individual than what the bank account says about you as an individual.
Totally.
And I don't know, that's how I think of it. It's when I meet someone who's rich, I think, so what amplified it in their personality? Just because now they have a larger medium of exchange, they can amplify what they do. It's like when, you get someone into power and say, oh, power corrupted them or power showed who they are. The same thing with money. They get too much money. What want got amplified? What does that say about them? I don't know.
Yeah.
It's a medium of exchange. It's not a thing per itself. But this is me just trying to be philosophical, defining stuff.
No, we totally agree on this. And I think the people who, to back to your original point and question around like, where's that line? The true answer is it's defined by the individual. And I think it's defined by how you view money itself. So to your point, I agree with you. You and I are on the same page. Like the utility, like what money is, it's to me, it's just a tool to improve my life. That's what it is. It's a tool to live a better life. It's not money in and of itself. It's not the numbers on the screen that I'm chasing. It's what does money provide for me in my life, the values it helps me magnify or live out, or, as we were saying when I talked to Carl Richards a few weeks ago, is money, and you alluded to this, money magnifies who you are and it scales what you do. So, like, you're the same person without money as you will be with money, but it's just a matter of like it magnifying those things, opening up maybe more freedoms to live out your personality more than you could before, or just on a larger scale. But I do think the people who don't have a mindset of money is truly just a tool to improve my life and it becomes money for money's sake. Again, the same Edward Abbey quote, grow for growth's sake is the ideology of a cancer cell. Like if it's just grow to grow your bank account, that way lies madness to me. I think you are in for a disastrous life.
And what I like about thinking of it from that perspective is then the question of like, what is the amount of money that is needed becomes what are all the wants that are needed beyond which my life is meh. And that is more of an introspective question about what are my wants in life. And there are people who, I don't know, I'm thinking of Buddhists who try to eliminate all wants and just focus on the needs. And then you've got people who are stuck in a consumeristic life cycle where the wants are unlimited and never end. And it is really a question like, I am on this earth, I covered my basic needs, and now I can decide on how much wants I want to pursue, whether they're status, whether they're luxury, whether they're convenience, whether they're helping others philanthropically. Those are all wants. And instead of determining a dollar number, you're determining the impact of wants and number of wants define who you are as a person. It's more of a full circle. It starts from the humans. It should end with the humans. It should not be a money thing. Money is a medium of exchange.
Yeah. I
Welcome
mean,
to humanism, Renaissance related philosophy.
welcome to a peek behind the curtain of every time Rabih and I get together without a mic, even we just sit there and talk about this stuff. But I'll just end with this, Rabih. I love what you just said there. And the advisors and I, we were just talking in our meeting earlier this week about how important it is truly, and well, I'll just say this, how important it is to put in the work that is required to come up with some level of what we call a statement of financial purpose. Right now, you can call this your why statement. You can call it whatever you want to call it. It doesn't matter what you call it, but like putting in the work of just answering the question, like, what is this all for? Why am I doing this? Both for your business and for your personal life. And I always, whenever I speak on this stuff, like whenever we speak to groups, we speak about this stuff, like values. And sometimes we hit this topic and I always acknowledge it and call it out. I'm like, it is not lost on us that when this stuff comes up, I can either actually see them or I just feel like the internal eye rolls of people being like, oh, cool. Like, just tell me what's going on with the market. It's like, yeah, that's important. Okay, cool. But like, if you don't have the purpose and intention behind it, I think you're going to end up being at a place at some point that's going to be lost kind of in the wilderness, if you will, being like, what is this all for? Like, I'm richer than I've ever been before in my life, and I'm only going to keep getting richer. And I'm sitting here empty and not knowing what's going on. That has nothing to do with the money. It has everything to do with the lack of work you put in to understand the why behind the money.
100%. The stock market movement is not your inner human experience.
Yeah.
Your wants, your desires, how you expand on that, how you manifest it is your human experience.
Robbie, we went deep, my guy.
I know.
We're really going off the rails here on the philosophy. I love this. We hope it's helpful. Robbie and I are being maybe a bit self-indulgent now having this
This
conversation.
is our podcast
It's
now. This
our
is not
podcast. We
about
always say that,
Dentist
but we
Advisors.
always hope it's valuable in some way. Speaking of going deep and adding incredible value, and I think where money would be, I've heard the best place to spend it. I've heard like the top of the list would be the Dentist Money Summit coming up in June 20th and 21st in Park City, Utah. Robbie, is that what you've heard as well?
100%. It is at the intersection of where you can bring meaning to money and meaning to your life. Dude, you got me on a roll. I feel I'm
Okay.
philosophical.
Okay. Talk about a call to action to come to the Dentist Money Summit. We would love to have you there. Honestly, come meet the DA team, come meet like-minded dentists. The speakers are so incredible. We're probably not going to be able to get all the speakers on the podcast before. We've had a couple already. I'm trying to get a couple more on the podcast before we have the summit, but it's coming up. We're about 6 weeks out. We would love to have you out. Check out the dentistmoneysummit.com. If you found this episode helpful in any way, any part of the conversation, you think someone should hear it, we'd love you to share the episode with a dentist friend. As we say, save a dentist life, share the Dentist Money Show. So for now, though, Robbie, thanks for being here. Thanks for getting all philosophical with me. Everyone, thanks for listening. Until next weekend, take care. Bye-bye.